Good morning, everyone. Am I audible to all of you? One moment. Good morning, everyone. Am I audible to all of you? Please send me a hi in the chat box to confirm that I'm absolutely audible to all of you, friends. Yes, I believe I'm live and I'm audible. Good morning, my dear CMA SFM students. Hope you're all doing good. Just let me know if my audio and video is absolutely clear. If that is the case, we can start off with today's session on CMA SFM Marathon. Friends, I have planned this session mainly with the intention of the upcoming examination that is about to happen for CMA SFM. So, I have already been recording classes for CMA SFM, but I thought why not we do the latest exam question papers together so that you can all be in sync with the CMA SFM paper also. So keeping this in mind, friends, today we have gone live with this CMA SFM Scanner Marathon, in which we'll be doing the past exam question paper and every question will be done with logic so that you understand the concept and you know how to apply for the examination also. So friends, are you all ready for this CMA SFM Scanner Marathon? Shall we begin now? All right. CMA SFM Scanner Marathon. All right. Friends, alright, so friends, what I'll do is first nothing, I have already pinned the chat where I have given my Telegram channel link. Please subscribe there. I'm sharing the notes over there right away now. I'll put the Telegram channel name once again. Okay, I hope you have got the link this time. Please select over there so that you can get the notes. I'm sharing the notes over there right away now. And then we are starting off with today's CMA SFM live session. Alright, one moment. Done sharing. I have shared it now. Okay. So friends, what we are going to do is I'll just show you the question paper now. So here is the CMA SFM past question paper. We'll start with June 2023 first, and then we will go and follow it up with December 23. Then we'll come to June 24, and then if time permits, we'll go to December 24 and so on. Everybody clear with this part? So shall we now begin with the first one, friends? Are you all ready? Fantastic. So let us start off with June 2023 question paper. Question number 1. Okay, I hope the audio is absolutely clear, right? Just confirm that. Are you all ready? Okay, I think the audio is absolutely clear over here. So question number 1. So friends, June 2023 question paper, section A, we are going to do question number 1. Okay, choose the correct alternative. So 1. So I'll put it like this. Question 1. Zotson PLC has been evaluating investments in a project which will require 39 lakh of capital expenditure. So point number A. Capital expenditure is 39 lakhs. Company expects the capital investment to provide annual cash flow of 6 lakhs indefinitely. So annual indefinitely means I'll call it as perpetual cash flow. So annual perpetual cash flow, you will get the number as how much? 6 lakhs forever. Discount rate is how much? 14%. Discount factor is 14%. Now they are asking what will be the base case NPV for Zotson. So they want you to find out the NPV. So I'll write down over here. Working note number 2. Base case NPV. Everybody clear with this part? So here I'll write down here cash flow, discount factor, discounted cash flow. So here in this we'll write down 1 minute. Year 0, you are investing 39. Year 1 to infinity, you are getting 6 lakhs. And the discounting factor is 14%. So here it will be 1 itself. So when you go for perpetuity, normally what happens is, what do? You take the infinity factor, that is cash flow divided by discounting factor. So 6 divided by 14%. Do you get the answer as 42.85? Therefore, what will be the NPV that you get over here? Do you get the NPV as 3.85 lakhs, friends? Let's go and check the options available here. Yes, the answer is 3.86 lakhs. Are you all clear with question number 1, friends? So we are done with this one particular question. Fantastic. Can I go to the second question? Okay. One moment, friends. I will also share the same material in my WhatsApp group so that whoever is there in the WhatsApp group can also access those materials. Just give me one moment. Done. I've shared it there also. So if you're there in the WhatsApp group, you can directly take the material from the WhatsApp group, or else you can always take the material from the Telegram page also. Okay. So friends, we are done with question number 1. Everybody clear with question number 1? Shall I go to question number 2 now? Alright. Let me now go to question number 2. Question number 2, June 2023 examination. Okay. So SBT is considering 4 projects, P, Q, R and T. So question number 1, 2. They are having 4 projects where they have given you the NPV and they have given you the standard deviation. So I'll write down working note number 1, basic data, particulars, project A, B, C and D. Point number A will be your expected NPV. Point number B would be your standard deviation. So now expected NPV is 1,20,000, 1,60,000. Then you have 1,40,000. Last you have 1,80,000. Am I right? Standard deviation is going to be 8,000. Then you have 20,000. Then you have 24,000. And last one what you will have is 28,000. Everybody clear? From this we can now find out what are they asking, which is the least risky project if coefficient of variation is used. So friends, we need to go and find out the coefficient of variation. What is the formula for coefficient of variation? It is standard deviation divided by NPV. So now tell me, what is 8,000 divided by 1,20,000? Do you get the answer as 0.06? Do you get the answer as 0.125? Do you get the answer as 0.1714? And last one, do you get the answer as 0.0155? Okay. So friends, when you put these numbers in this particular manner, one thing what will happen over here is, what is the logic of this 0.06? It means for every 1 rupee of NPV, my risk is only 0.06. Whereas over here, for every 1 rupee of NPV, my risk is 0.125. So if I look at it from this angle, can I say 0.06 is the least? Here you have 0.015. Here it is 0.060. Hold on. So I think D is the answer. Shall we cross check the answer, friends? Give me a moment. I'll just duplicate this tab. They have given the answer as A. So here A is the answer. That's because 0.06 and the other one is 28,000 is the NPV for the last one, right? And 1,80,000. That is 0.155. Sorry, I made it wrong. It's supposed to be 0.125. 155. So in that case, which is the best answer, friends? This, because the logic is for every 1 rupee of NPV, standard deviation is only 0.06. Is everybody clear with this part now, friends? So we are done with this question also. Shall I go to the next one, friends, now? Are you clear so far? Let us do question number 3. Friends, my objective is not to do theory right now, but this question as a part of MCQ, we will do it. Okay, shall I begin now? Okay, so now we are doing question number 3, which is the question paper we are doing June 2023. Okay, fine. Friends, I'm not doing the very recent question paper mainly because if we do that, same questions will not come in the exam. Alright, so now here, which of the following, one moment, which of the following are not components of digital infrastructure? API is an infrastructure, cloud service is a digital infrastructure, stable coin is a digital asset. It is not an infrastructure. It is an asset coming inside the infrastructure. Internet is also infrastructure. So the right answer is going to be what? It is going to be stable coins. Everybody clear with this part now? Okay, so we are done with this question also. Let me go to the next one. Question number 4, June 2023 exam. So friends, any question that you write, we should always start with working note number 1, basic data. Okay. Mr. Patob, a portfolio manager, managing a portfolio, beta is 1.5. So here the beta is turning out to be 1.50, whose current market value is how much? 12 crore. Current market value is 12 crore. It is expected that the markets are likely to correct downward and hedging needs to be adopted using Nifty futures. Okay, so there is going to be a change in the market. Current index futures are quoted at 8,000. 8,000. Okay, I hope audio and video is absolutely clear, friends. Just confirm if there is any confusion. Okay, and each contract underlies 100 units. So multiple. Therefore, I can go and find out the contract size. So the contract size will turn out to be how much? It turns out to be 8 lakh. Everyone clear? Mr. Pato hedges 100% of his portfolio. Okay, so he's doing 100% hedging. 100% hedging. What is the Nifty index to be sold? So friends, for perfect hedging, we have learnt a formula S0 into beta into how much percentage? Into 100 percentage. Am I right? So considering this, in my example, the spot value is how much? 12 crore. Into beta is how much? 1.5. Into 100 percentage means I'll get the value as 18 crore. Now 18 crore has to be divided by 8 lakh. Do I get the number of contracts over here as 225 contracts, friends? That is the right answer. Shall we go and check? Yes, the answer is C. For 4, the answer is C. Perfect, friends. So we are done with this question also. Are you all clear with this part now, friends? Fantastic. Okay. Can I go to the next one? Okay. Question number 5. So question number 5, June 2023 examination. Let us do it. Mr. GORG is a Forex dealer in India. The rate of rupee and euro are given below. So point number A, they have given you rupee bar dollar, if I am not wrong. No, they have given you dollar bar rupee. They have given you dollar bar rupee. How much is dollar bar rupee? 0.012. 0.012 to 572. Dollar bar rupee. Other one what they have given over here is that in the international market, rupees of rupee and euro in the international market are given. Other one they have given you, I think dollar bar euro if I'm not wrong. Yes, they have given you dollar bar euro. Dollar bar euro is 1.117294. From this, they want you to find out the direct quote of euro to its customers. So friends, direct quote would mean rupee bar euro is a direct quote and euro bar rupee will be an indirect quote in India. So this is in India. Therefore, the direct quote that they are asking over here will be what? It will be rupee bar euro. Had they given the question as we are in Europe, then the direct quote would have been what, friends? It would have been euro bar rupee. Everybody clear? So how do you find out rupee bar euro? That is nothing but rupee bar dollar into dollar bar euro. Or in other words, in my question, we don't have rupee bar dollar, but we have dollar bar rupee. So 1 divided by that will give you rupee bar dollar into dollar bar euro is directly given 1.117294. So when you solve this, do you get the answer as 88.87 rupees per euro, friends? This will be your answer. 88.87. The answer is B. Fantastic. We are done with this question also. Friends, I hope you are all comfortable with the lecture so far. If you are absolutely comfortable and if you are genuinely benefiting from this, friends, I have only two requests to you. Request number one, like this video and subscribe to this channel. Request number two, share it with at least two of your friends so that even they can benefit from this CMA SFM marathon. Shall we now go to the next question, friends? Question number 5 is done. Let us go to question number 6. Question number 6, June 2023 examination. Okay. Plain vanilla swap means what? Friends, in a vanilla swap, if you have attended my class, you will know you have fixed rate and then you have a floating rate. Correct? One fellow will be paying fixed, other fellow will be paying floating. Then we swap. So once you swap, this fellow who was paying fixed will now end up paying floating. The fellow who was paying floating will end up paying fixed. Everybody clear with this part? So here, is it fixed to fixed swap? No. Is it fixed to floating swap? Yes. Is it floating to floating swap? No. Is it currency swap? Currency swap is called as currency swap. Vanilla swap is fixed to floating. So the answer is B. Yes, friends. So we are done with this question also. Shall I come down? Okay. All right. Can I go to the next part now, friends? Ready. Let us do question number 7. Question number 7, June 2023 examination. Okay. If an option's theoretical value increases by 1.75 if the interest rate is decreased by 1%. So what is happening? Interest decreases, option value increases. Okay. If this is the situation that you are going through, in that case, okay, in that case 1.75 is what? So here they have multiple things, RHO, theta. Friends, RHO is what gives you the relationship between interest and the option rate. If RHO, I'll just explain the theory first. Interest goes up, option value goes up, then it is called as a call option. But if interest goes up and the option falls down, then it is called as a put option. Interest goes down, option value goes up, again it is a put option. But if interest falls down, option value also falls down, then again you call it as call option. Or in other words, if they are going in the same direction, it is call option. If they are going in the opposite direction, it is put option. Everybody clear? So here this is opposite, right? Interest is increasing, decreasing, and the value is increasing. It is a put option. Your answer should be B. Shall we check it? Yes, friends. Are you all clear? Same way, when you talk about theta, theta is a measure of time decay. That if the same option is exercised after 1 month, what will happen to the value of the option is what you call it as theta. Everybody clear with this part now? Yes. So we are done with this question also. All right, friends. I hope you are all clear so far. Can I go to the next one now? Okay. I'm going to the next part. Okay. Question number 8. The intercept of security market line. So friends, first thing, what do you mean by the word security market line? Security market line is nothing but it is going to be the graphical representation of CAPM. Everybody clear with this part? So when you're talking about CAPM, basically the graph goes like this. I'll just show you. Let us say this is the graph, all right. Here the graph goes like this because here they give you the beta. Here they give you the CAPM. So in other words, what they are trying to tell you is that as beta increases, your CAPM also goes on increasing. That is the meaning of CAPM, sorry, of security market line. Okay. So now in this axis is called as the x-axis. This is what you actually call it as the y-axis. Everybody clear? Now, in this diagram, they are asking intercept of security market line on the y-axis is going to be what? On the y-axis, the intercept is actually going to be what? It is going to be your CAPM return. That is the right answer. Unfortunately, in your exam, they have not given that CAPM only. Okay. Instead, they have given the answer as risk-free return. That is not correct. This answer is wrong. At least I can say the positive risk premium, because how do you find out CAPM? RF plus beta into RM minus RF. Everybody clear with that part, friends? So in your suggested answer, A is the answer, but RF is not coming on the y-axis. It is the CAPM that is coming on the y-axis. Everybody clear with this part now? They have given the answer as A, but this answer is wrong. I hope everybody is clear so far. Yes. Shall I go to the next question now? Okay. One moment. All right. Question number 9, June 2023 CMA SFM exam, an MCQ question. MS Bristol is considering an investment in a mutual fund with a 2% loan. Working note number 1, basic data. Point number A, investment load is equal to 2%. His other alternative is put the money in bank deposit. Invest in FD at the rate of 8%. Her investment period is 4 years. Invest for how many years? 4 years is what they are trying to tell. Okay. What should be the annual rate of return of the mutual fund? So that she prefers investment in the fund to the investment in the bank. So basically they are asking two things. Okay. How much, so I'll just tell you, how much will be your closing value if you invest in the FD? That is question number 1. So for that the answer would be, let us assume I am investing 100 into 1 plus 8% whole power 4, because it is going for how many years, friends? It is going for 4 years. 2, 3, 4. So at the end of the fourth year, you end up getting how much money? 136.04. Now, they want closing value in mutual fund. Now in mutual fund, one other problem that's coming up is that there is an investment load of how much, friends? 2%. Everybody clear? So if I'm investing 100, will I get exactly 100 back in my hands? No, I will end up getting only 98 in my hands. 98 into 1 plus some percentage whole power 4 should give me the answer as 136.04. Are you understanding my point? Or in other words, can I just say 1 plus x percent whole power 4 is equal to 136.04 divided by 98? Do I get the value as 1.388? So with some percentage, if I get 1.388, means my answer is correct. Now let us check one by one. If it is 8.15%, 2, 3, 4, I get 1.368. Is that the number that they are saying over here? I should get 1.388. Alright, let me check for 8.55. I get exactly 1.388, friends. Are you understanding my point now? So this is the answer. 8.55% is the answer B. See, that is the answer. I hope you understood this part also, friends. Fantastic. So we are done with this particular question also. Can I go to the last one? Question number C. Sorry, last one. Okay. So June 2023 exam, question number 10 MCQ. Which one of the following is not a part of the market risk? Friends, market risk is what? Diversifiable risk or non-diversifiable risk? Market risk is a non-diversifiable risk. Okay. Equity is in the market, so it will definitely affect the market. Inflation also is something that will affect the market. Now, what do you mean by downgrade risk? Shall we just go and check what is downgrade risk? It is a risk of a credit rating agency will lower your credit. So friends, if credit rating agency, they measure debt, correct? Loan. So now, if there is a loan involved, normally beta of debt is what? It is 0. Why? Because it does not affect the market. Market goes up or come down, loan remains the same. So the answer is going to be what? The answer is going to be downgrade risk. C should be the answer. Yes, friends. So we have got the answer for this particular question also. Are you all clear with this part now? Yes. Friends, we are done with the MCQ part. Can I now go to the main question? But before I go to the main question, can you please confirm if everything is clear? Can you just type a yes in the chat box? If everything is perfectly clear, can you please type a yes so that I can be sure that you are all correctly and thoroughly understanding the entire areas? Yes, fantastic. Now friends, we are getting into the major question. Question 2A is a question on capital budgeting. It's a very long question. One advice to all the CMA SFM students. NPV question, you do it, but do it in the end. It's very long. So what happens is it has an emotional impact on the students when you do it in the beginning. Now suppose you start your exam, okay, and your first question is going to be this one. It will take you at least 45 minutes to 1 hour to complete this question. And this question is coming for how many marks? 10 marks. Suppose it doesn't come right, okay, 1 hour is over, 10 marks gone. Then you have only 2 hours left for the remaining questions. So always use a smart strategy. Do this in the end. Everybody clear with this part? Okay, so I'll start with the remaining question, which are the easier ones and which can be done much more easily. Ready? So friends, question number 3A. Okay, this June 2023 examination. Shall we do it together now? Okay. So N has an investment proposal requiring an outlay of 1,60,000. Okay. The investment proposal is expected to have 2 years of economic life. I'll draw a diagram. You have 1,60,000 of the initial outlay. Alright, then they are telling the investment proposal is expected to have 2 years economic life. Life is 2 year. Salvage value is going to be 0. In year 1, they have a 40% probability that the cash inflow will be 1 lakh or 1,20,000. Friends, this is the exact question we have done in my regular classes. I am not sure if you are a regular student. If yes, you will definitely come to know. So here it is 1 lakh and 1,20,000. So 0.4, 1 lakh, 0.6, 1,20,000. After that, for year 2, you can have 3 outcomes. 1, 2, 3. 1, 2, 3. So the first one is for, if it is 0.4, after that, after 1 lakh, it can be 48, 64, 88. Other one is going to 0.2, 0.3, 0.5. 0.3, 0.5. Other one is 0.4, 0.5, 0.1. 80,000, 1 lakh, 1,20,000. Alright friends, are you all done writing till here in your book? The company uses 10% discount rate is what they are asking. Okay. So step number 1, this question I'll give you some time. Can you please draw this decision tree in your books now? Hi Swaminathan, today we are doing CMA SFM question paper. We'll definitely plan for CMA Inter also very soon. CMA SFM question is the answer B. See, that is the answer. I hope you understood this part also, friends. Fantastic. So we are done with this particular question also. Can I go to the last one? Question number C. Sorry, last one. Okay. So, can I go to the last one? Question number C. Sorry, last one. Okay. So June 2023 exam. Question number 10 MCQ. Which one of the part following is not a part of the? Yes, friends. Are you all done writing till here in your books now? Okay. So now what they are asking is, friends, whenever you get a question on decision tree, now what we have done, we have put the chart over here, correct? After we put the chart, we go to the second part. Step number 2 or working note number 2 is normally present value cash flow. Okay. So I'll put a heading called as path. Here in my example, you are having how many paths? 1, 2, 3, 4, 5 and 6. Correct? 1, 2, 3, 4, 5 and 6. So I'll put year 1 cash flow. Then I will put year 2 cash flow. Then I'll put present value cash flow for year 1. Present value cash flow for year 2. And then I will get the combined present value cash flow. Alright. Now, Year 1 cash flow, I think we already know. Year 1 cash flow is how much? 1 lakh, 1 lakh and 1 lakh. Other one is going to be 1 lakh 20, 1 lakh 20, 1 lakh 20. Everybody clear? Year 2 is 48, 64, 88, correct? And the other one is going to be 80, 1 lakh, 1 lakh 20. Now, to take the present value cash flow, we'll do 1 divided by 1.1. Do you get the answer as 90,909? Then you will get 1,09,091. Year 2 would be 0.826, correct? 39,648, 52,864, 72,688, 66,080, 82,600, 99,120. Okay. So the total will be 1,30,557, 1,43,773, 1,63,597, 1,75,171, 1,91,691, 2,08,211. Can you please write down this also in your books, friends? All right, friends, are you all done writing till here in your books? After we get the present value cash flow, the next step for us would be joint probability. Path, year 1 probability, year 2 probability, joint probability. Okay. So here you will have first year it's 0.4, other one is 0.6, correct? 0.4, 0.4, 0.4, 0.6, 0.6, 0.6. All right. And the second year is going to be 0.2, 0.3, 0.5. Other one is going to be 0.4, 0.5, 0.1. So when you take it, you get 0.08, 0.12, 0.20, 0.24, 0.30, 0.06. All right. So friends, we have also got the combined cash flow. We have also got the joint probability. Here, one more thing I'll just find out. Can I say this is going to be your worst outcome? And can I say this is going to be your best outcome? Everybody clear with this part? Okay. Once you get this, I'll go to the next working note and here I'll find out NPV. How do you find out the NPV? Sorry, not NPV. We'll first find out the expected cash flow. So there I will write path combined cash flow joint probability cash flow into probability. So what are the numbers I get? 1,30,557, 1,43,773, 1,63,597, 1,75,171, 1,91,691, 2,08,211. And what are the probability? 0.8, 12, 20, 24, 36, 24, 36. All right, now do I get the number as 10,444? 17,252, 32,719, 42,041, 57,507, 12,493. Okay, so when I add up all this, do I get the total as 1,72,456? Therefore, my NPV will be 1,72,456 minus whatever is the investment. How much was my investment? 1,60,000, correct? So when I reduce this, do you get the answer as 12,456 as my NPV, friends? Yes. Is the NPV positive or negative? The NPV is positive. Will you accept the project or will you reject the project? You are going to accept the project. Are you all clear with this part? So let's go down and read decision tree. Done. NPV giving breakup of each path of decision tree. That also we have done. Worst outcome. So now we need to find out that. So I'll write down the next working note. Analysis of worst outcome. So in that we'll tell NPV of worst outcome will be nothing but it will be, what is the inflow of the worst outcome? 1,30,557, correct? Minus your investment is how much? 1,60,000. Do I get the answer as minus 29,443? Point number B, NPV of the best outcome. Or wait, I'll just write down over here, probability of the worst outcome. So what is the probability of the worst outcome? Everyone tell me. I think we can find out the number over here. That is 8%. Am I right? Same way, now we need to find out NPV of the best outcome. So for the best outcome, you have 2,08,211 minus 1,60,000. Do you get the answer as 48,211? This is C, and the last part will be probability of the best outcome. So what is the probability of the best outcome, friends? Is it turning out to be 6%? Fantastic. So with this, I think we are done. Analyze the probability of one more question. Analyze the probability of having negative NPV is what they are asking. Okay. So last working note. Probability of having negative NPV. So here what is going to happen is we'll check path by path. Path 1 is anyways negative. We know the inflow, we know the outflow. From that we can find out the NPV. So already for path 1, 1,30,557. Outflow is how much? 1,60,000. So my NPV is minus 29,443. What is the probability that we got for this one? Did we get the probability as 8%? That is the first thing. Let's check the second one. 1,43,773. Outflow 1,60,000. You get an NPV of minus 16,227. Again, what is the probability of this? 12%. So both together, what is the combined probability of getting negative? Third one, you won't get negative. Third one, it is 1,63,000. It is above 1,60,000. So you won't get negative. So tell me, considering these two, what is the probability of getting negative NPV? That is 20%. Everybody clear with this part? Shall I just go down and check? See, negative NPV, 20%. Earlier one, 8%. Are you getting my point? That is the worst outcome. Best outcome they haven't asked. Expected NPV is 12,447. Hence, we are supposed to accept the project. Are you all clear with this part, friends? These notes, I'll share it in the WhatsApp group. If you're not there in the WhatsApp group or in my Telegram channel, just WhatsApp me. My number is given over here. You can message me on my number. I will arrange it for you. Okay. So we are done with this question also. Are you all comfortable so far, my dear friends? Can I go to the next one now? If you are genuinely comfortable, please like this video, subscribe to this channel, share it with at least 2 of your friends so that everyone can benefit from this. Okay? Can I go to the next one? Not this. Alright, next one is a question on convertible bond. Ready? Question number 4A, June 2023 CMA SFM exam. Ready? They have given you the face value. So we'll write down the basic data. Basic data. Face value 1000. Coupon rate 8.5%. Time 3 years. Interest payment annual at the end of the year. Principal repayment at the end of bond maturity. Conversion ratio 25. That means every one bond will be converted into 25 equity shares. Everybody clear? Next part. Current market price 45. All right. Market price of convertible bond 1175. So friends, here we can find out certain things. I'll write down working note number 2, analysis. I will first use the terminology that I normally use and will cross check that with the question, that the words that used in the exam paper also. All right. Are you all ready? Fine. First one, what they ask is, let's say, market conversion price. So that means, what is the meaning of market conversion price is that now they are converting this into how many bonds? 25 share. Each share has 45 rupees. So what is 45 rupees into 25 share? So if I convert, I will get 1125. But right now my bond is giving me 1175. So in that case, will I agree for a conversion? Ideally, I will not agree for a conversion. Are you getting my point? The second one will be, or wait, I think the wordings is not market conversion price. We call it as convertible value of the bond. Then the second one is what we call it as market conversion price, where I do a reverse mechanism. What is 1175 divided by 25? Do you get the answer as 47? So ideally the market price should have been 47, then conversion wouldn't have been a problem. But if the conversion value is 45 is the market price, it becomes an issue. So what we do is here we give a premium. That is the balance 2 is given as premium. How did I get this 2? 47 minus 45. Once you get the premium, we also convert the premium into percentage. So that will be 2 divided by 45. From 45 you are giving a premium, right? You get the answer as 4.44 percentage. Alright. So these are some of the things that we normally work it out. Let's go and check what they are asking in your question. Okay. Straight value of the bond. So friends, straight value of the bond is nothing but 1125. Shall we cross check? Straight value of the bond is present value of future cash flow. These terms are a little confusing. So I'll write down the next one. Straight value of the bond means the present value of future cash flows. So now in this question, have they directly given the straight value of the bond? Just go and cross check. Not given, right? So we need to find it out. How do we find it out? Here, cash flow, discount factor, discounted cash flow. So now what's the life told in the question? 3 years. So for the next 3 years, they are going to pay a coupon rate of 8.5% on a face value of 1000. That will be 85,000. And now down they have told that the market rate is 9.5%. 0.761 to 0.508. 213.18. 761. 974.18 will be the straight value of the bond. Shall we go and cross check? The answer is yes, 974.96. That is a rounding of value. Second, they have asked conversion value of the bond 1125. I think we already got that. Conversion value of the bond 1125. We got that. Next thing is conversion premium 2 rupees. We already got that 2 rupees over here. Then they are asking percentage of downside risk, that we need to find out. Friends, percentage of downside risk means right now the price of the bond is how much, friends? 1175. But present value of future cash flow is turning out to be how much? 974.18. So very soon the price is going to fall down to 974.18. So 1175 minus 974.18 is equal to how much? Do you get the answer as 200.82? This much of fall can happen from 1175. Yes or no? So the percentage will be 17.09 percentage. Are you all clear with the concept? 17.09. They have got 20.52. I'll tell you why. They have taken the denominator as the second one. You can do it in two ways. 200.82 divided by 974.18. Okay. Or 200.82 divided by 974.18. Then you get 20.62%. Both the answers are correct, friends, because they've just used a different base for it. Conversion parity price 47. We have already got 47 over here. Are you all clear with this part now, friends? So we are done with this one particular question also. We have done exactly similar type of question in my mastery book and also in my ODB book, friends. I'm not sure if you're following that. In case you want to buy the mastery book or ODB book, WhatsApp me. I will arrange it for you. Okay. So I think we are done with this question also. Phew. Are you exhausted, friends? Let us do this one question and then we'll take a break. Will that be okay? Yeah? All right. Fine. Let us do question number, what is this? Question number 4B. Question number 4B, June 2023 examination. Okay. Shall we begin now? Fine. Miss Tonum has invested in 3 points in 3 mutual funds. Okay. So there are details of 3 mutual funds. Particulars A, N, P. Point number A, amount. What is the amount they have invested? 2 lakhs, 6 lakhs and 3 lakhs. 2 lakhs, 6 lakhs and 3 lakhs. Net asset value at the time of purchase. NAV. 15.45, 15.15 and the last one is 15. Dividend received up to 31/3/2023. Dividend 10,000, 0, 8,000. Alright. Friends, from this data at the time of purchase, we can also find out the number of units. How will I find out the number of units? A divided by B. 12,945. 39,604. Last one is going to be what? 20,000. Everybody clear with this part? Alright, next. Once you're done writing this, next part they have also told dividend. So we can find out the dividend per unit. How will you find out the dividend per unit? C divided by D. Point 0.77, 0, 0.40. Everybody clear so far? Now I'll go to the next one. Down when you come, I think you've got dividend. You have the closing NAV is given over here, correct? NAV 1 is given. 15.38, 15, 15.30. Now they have also given you the effective yield per annum. That is 9.6 minus 11.6, 24.15. Okay. 1 year is 365 days. So friends, they have missed out some information purposefully. This exact question I have done in my mastery book and in my regular recorded classes, friends, but we'll do it again because it's a part of your examination question. Okay. So first I will take A. So I'll write down the next working note heading. Analysis of mutual fund A. Analysis of mutual fund A. Alright. So here, if they have got this as a per annum yield, we have the NAV 1, we have the NAV 0, we have the D1, correct? So 15.38 minus 15.45 plus D1. What is D1? Plus 0.77 plus CG1 is not there, divided by NAV 0 into some I should convert that into 1 year, correct? So into 365 divided by some number of days is ideally giving me an effective yield per annum of how much? 9.60%. Everybody clear? So 0.7, that is 4.53% into 365 divided by x is 9.6%. So in other words, 9.6 divided by 4.53 divided by 365. 1 minute. One moment, friends. I'll get the number of days as 172 days or 173 days. Everyone just cross check. Let's go and check the answer first. Number of units, did we get 12,944? Let's just go and check. 12,945. So this part is correct. 39,603. 39,604 also is correct. 20,000. That is also correct. So we have got the units correct. Total NAV will come to that number of days. We got 173 days. That answer is also correct, friends. Like this, now I need to do mutual fund B and mutual fund C. Shall I do it now? Next working note, analysis of mutual fund B. So here again I'll have to put the same equation, and the equation would be 15 minus 15.15, 15 minus 15.15 plus D1 is 0 divided by 15.15 into 365 divided by x is equal to minus 11.6%. So solving this is getting a little tricky, but we'll do that. So I'll get 365 by x is equal to 11.6%. Okay. So then in other words, x will be equal to 365 divided by 11.60. Do I get the answer as 32 days approximately? Yes, let's go and check. 31, 32 days. Perfect, friends. Same way I need to do it for mutual fund C also now. Analysis of mutual fund C. Shall we do it now? Okay. So mutual fund C again. What is the last one? 20, 15.3 minus 15 plus 0.4. Divided by x is equal to 24.15%. All right. .66% into 365 divided by x is equal to 24.15%. So 365 by x is equal to 5.18. So x is equal to 365 divided by 5.18. Do you get the answer as 71 days approximately? 70 or 71 days? Fantastic, friends. So we have got this answer also in our books. Everybody clear with this part now? Perfect. So we are done with mutual fund C also. Okay, now let's read the questions one by one. Number of units we got. They want the total NAV. So I'll write down the next two working, or I can do that here itself. Total closing NAV, right? So here I'll write down point number H, total NAV. So that will be 15.38 into 12,945. 1,99,094. 39,604 into 15. 5,94,060. 20,000 into 15.3. 3,06,000. So when I add up these three, I'll get the answer as 10,99,154. Just cross check. 10,99,154. Yes, friends. So we have got total NAV also. Now they want total yield. All right. So friends, what do you mean by yield? Dividend yield is what they normally intend by the word yield. So that will be total dividend divided by total NAV. Okay. I'll just write down over here I. Total dividend. So that will be 12,945 into 0.77. 9967. 39,604 into 0 will be 0. 20,000 into 0.4 will be 50,000. So total will be 59,967. So the dividend yield will be 59,967 divided by 10,99,154. Do I get the answer as 5.45 percentage? Let's check if that is the answer, friends. So they have got 1.17,153. Did I make any mistake? One moment. 20,000 units into 0.4, right? That is 8,000. Sorry, I made a mistake here. This should be 8,000. 20,000 into 0.4 is 8,000. So when you take 8,000 and you add 9967, you get 17,967. Divided by 10,99,154 will be 1.63 percentage. 17,153 is correct. 1.55, you got 1.6. That's a rounding of difference, friends. That's absolutely fine. Yes, friends. So with that, we are done with this particular question also. Are you all clear with this part, friends? Shall we do one more question? Do you have energy or should we take a break now? Let me check what are the other questions to cover. 5A, 5B, 6A, 6B, 7A, 7B. We have some very good questions more to cover, friends. I think 4 to 5 questions are there which we need to cover right now. I think we'll take one more question and then I'll take a break. Will that be okay? Fine. Let us do question number 5A, friends. Can you take 1 minute and go through this question? Yes, friends. Shall we resume now? All right. So we are doing question number 5A now. Question number 5A, June 2023 examination. Shall we continue, friends? All right. So here, on the basis of the given information, Mr. Naveen wants to create a portfolio equally as risky as the market. Friends, when you say equally as risky as the market, what do you mean over there? You mean that the beta of the market is 1. Everybody clear? So I'll write down assets A, B, C, D. A, B, C. D is a debenture. What is the beta for debenture? 0. Investment is 4 lakh, 5 lakh. This do we don't know. We need to find out. So we need to get the weight and we need to get the beta. Alright. Now here what's the beta for the first one? 0.7, 1.1, 1.6 and the last one is going to be 0. Okay. Now some weight when you multiply. So when you say 4 lakh into something plus 5 lakh into something plus total money that is having with him is how much? 20 lakh. Okay, so of this 20 lakh, when you check 4 lakh, you get the weight as how much percentage? 0.2. Here you will get 0.25. These two is what we don't know. What will be the weight? So let me take the weight of this one. Total weight is going to be 100. Correct. So this should be 100 minus 45%. So let me put it this way. Or wait. Beta into weight. Let me put it this way also. 0.7 into 0.2. You get 0.14 here. You get 0.275 over here. Here you will definitely get 0. Overall, what is the weight that you're looking for? Overall weight should be 1. Now, if I do a reverse working, 1 minus 0.14 minus 0.275, I'll get the number over here as 0.585, correct? Now, how do I get 0.585? If my weight over here is 0.3656. Are you getting my point? This into 20 lakh when I do, I'll get the amount over here as 7,31,250. Everyone clear with this part? And the last one, automatically the weight should be total 100%, right? So here you'll get 0.1844. That is 3,68,800. This is how you are supposed to work out. Are you all clear with this part now, friends? Perfect. So I think we are done with the first part. Let me go to the second one. I think that's it. We are done with this question. Perfect. Let's check. Let's check the solution. 7,31,200, 3,68,800. Yes, we have got the answer, friends. So we are done with this particular question also. All right, friends. Are you all comfortable so far? Shall we take a break now? Now, friends, we'll take a break. After the break, we'll do the remaining questions. 5B, etc. We'll start doing and we'll try covering the remaining part of June 2023 paper today. Will that be okay with all of you, friends? All right. So we'll take a 30 minutes break now. Okay. And time is 11:15, 11:17. We'll resume at 11:45 a.m. Will that be okay? So we'll resume at 11:45 a.m. All right. See you after the break, friends. I'm not removing the YouTube live. Let the live be here only. Okay. See you after the break. Thank you. Friends, I'm back. I hope I'm audible to all of you. Hello. Yeah. Let me just keep my phone also open so I can also see that the class is moving smoothly and the audio is also comfortable. Yes, friends, I believe you all can see me now and I hope everything is audible. Let me just confirm that part. Okay. Yes, friends, I believe. Yes, it's absolutely clear. So, friends, can we resume with our class now? Everyone ready now? Let's start with the next question. Question number B. That is 5B, right? Okay. Question number 5B, June 2023 examination. Following is the information relating to three mutual funds S, T and Z. Year 1, 2 and 3 they have given the data. From this data we can find out the average return. Everybody clear with this part? Okay. So once you get the average data, let me just go and check. What have they asked in the question? Down they have given you the correlation with the market. So this is correlation SM, correlation TM, correlation ZM. Everybody clear? So they have given you the correlation with the market. Variance of the market is given as 9% and the rate of return on the government bonds is given as how much? 7%. So RF is given. They have also given RM. They want you to find out the mutual fund based on Sharpe's ratio. Now tell me friends, what is the formula that we use for Sharpe's ratio? RM minus RF divided by standard deviation. Am I right? Okay. So now here, sorry, not RM, it will be security. So it will be RP. So we need to get the average of all these things. So let's say for example, first one, you will get the average as 30. 30 divided by 10, you get the answer as 10%. 10% minus RF7 divided by standard deviation. Now to get the standard deviation, one thing they have given you the correlation with the market. Let's write down. So I'll go one by one. First I'll write down working note number 1, average return. Particulars STZ. Point number A will be average return. So that will be 10 for the first one. Okay. It will turn out to be 10, 15, 23, right? 23 divided by 3 will be 7.66% for the second one. And last one would be 14, 24, 34, 42. 42 divided by 3 would be 14%. So these are the three average returns that I got for S, T and Z. Alright. Now they have given you the correlation with the market. Point number B, correlation with market. So one moment. So that will be 0.45, 0.25 and what is the last one? 0.65. Alright. So okay. Friends, from this correlation, ideally, we need to now go and find out the standard deviation. Standard deviation of S, standard deviation of T, standard deviation of Z. Because once you get that, I can directly take that and I can go and find out the, I can find out what? I can find out the Sharpe ratio. Once I get the standard deviation, down they have given you the variance of the market also. From that, we can also find out the Trainer's ratio because we can find out the beta. Shall we do it one by one? So working note number 1 is what? Average return. Let me go and write down working note number 2. Standard deviation of S. Let us start with S first. So what were the numbers for S? 10, 8, 12. X. 10, 8, 12. X bar is equal to 10. Probability is not given, so I'll take it as equal probability. If they don't give, we take it as equal probability. That is the easiest way of doing it. X, P, X minus X bar, 0, minus 2, plus 2. Then I will do P into X minus X bar the whole square. Do you get the answer as 3.33? Sorry. X minus X bar the whole square will be 0 here. 4 into 0.3333 would be 1.33. Last one also will be 1.333. So do I get the total as 2.666? So standard deviation of S will be 1.63. Same way I'll put over here standard deviation of what is the second security we are talking about? T. X, P, or instead of using X, if it creates confusion, I will use the word T, P, T minus T bar, P into T minus T bar the whole square. 5, 10, 8. And what is the average we get? 23 divided by 3 will be 7.66. 0.33, 0.33, 0.33. So 5 minus 7.66 would be minus 2.66. This one would be 2.33. This one would be 0.333. So now 2.66 into 2.66 into 0.333 will give you 2.35. 1.80, 0.03. 4.185 will be the variance. So my standard deviation of T will be square root of this, that is 2.04. Is everybody clear with this part now, friends? Perfect. I'll go to the next one now. So I got standard deviation of S. I have also got standard deviation of T. The third one is going to be standard deviation of Z. Z, P, Z minus Z bar, P into Z minus Z bar the whole square. 14, 10, 18. 14, 10, 18. Total was, I think, for 24. 42 divided by 3, you get the average as 14. Probability would be 0.33, 0.33, 0.33. 0, minus 4, plus 4. 0, 16 into 0.333 will be 5.33, 5.33. Total will turn out to be 10.66. Square root of that would be 3.26. Everybody clear? So 1.63, 2.04, 1.63, 2.04, and the last one is going to be 3.26. 3.26. So friends, I think with the average return also we have got standard deviation also. Let me put RF also. So RP minus RF divided by standard deviation, right? RF is turning out to be 7, 7, 7. Now friends, here itself I can find out the beta also. How do you find out the beta? The formula is going to be standard deviation of S divided by standard deviation of the market. So the market standard deviation will be 3. Why? Square root of 9 divided by 3% into correlation is given, that is 0.45. So 1.63 divided by 3 into 0.45 if I do, I'll get the beta as 0.25. Second one would be 2.04 divided by 3 into 0.25 when I do, I'll get 0.17. Last one, I will take 3.26 divided by 3 into 0.65. That will give you the answer as 0.706. Everybody clear with this part? Okay. Now friends, once you got this answer, I will now find out my Sharpe ratio. I will also find out my Trenner's ratio. So Sharpe ratio, the formula would be RP minus RF divided by standard deviation. 10 minus 7 divided by 1.63. Do I get the answer as 1.84 for the first one? 7.66 minus 7 divided by 2.04, 0.32. Last one is going to be 14 minus 7 divided by 3.26, that is 2.14. So which is having the best Sharpe ratio, friends? For every 1% risk, you get the best, not here, sorry. You get the best for C, 2.14. Everybody clear with this part? Next, here only what I can find out now, I can find out the Trenner's ratio also. So what is the formula for Trenner's ratio? RP minus RF divided by beta, that is the difference. So it will be 10 minus 7 divided by 0.25. I'll get the answer as 12. Second one would be 7.66 minus 7 divided by 0.17. That will be 3.88. And the last one would be 14 minus RF is how much? 7 divided by 0.706. That is 9.91. So based on this, do you get the answer as 12 over here, friends? So based on Trenner, S is better. Based on Sharpe, Z is better. Shall we cross check the answer? 1.84, 0.33, 2.14. Correct. So we got 2.14 as the answer. Other one we got 12, 3.88, 9.87. We got exactly the same answer, friends. So I think that's it, right? Have they asked anything else? No. We are done with this question also. Are you all clear with this part, friends? Fantastic. Friends, just take a minute. Just take a minute, go through this. I will come back in 1 minute's time. Yes, friends, I'm back with a small change in outfit. Okay, fine. So I think we are done with this question. Shall I go to the next question now? Question number 6. Ready? Question number 6, June 2023 examination, CMA SFM. So here they have given you 3 shares. So I'll write down question 6A. Working note number 1, basic data. They have given shares A Limited, B Limited and C Limited. They have given the number of shares as 10 lakh shares, 6 lakh shares and 5 lakh shares. Price is 400, 500 and 600. From this, can I find out the total value? 4,000 lakhs, 3,000 lakhs, 3,000 lakhs. So when I add up all the three, do I get the answer as 10,000 lakhs, friends? Then from this, can I find out the weight also? Do I get the weight as 40% weight, 30% weight and 30% weight? They have also given the beta 1.5, 1.2, 1.8. So when I do beta into weight, I will end up getting the overall beta over here. Do I get the answer as 0.6? Do I get the answer as 0.36? Do I get the answer as 0.54? Do I get the overall beta as 1.50? Is everybody clear with this part now, friends? All right. So that is working note number 1, basic data. All right. After we are done with basic data, I will go to the second part. Investor thinks he wants to reduce the beta to 1.25. Right now, how much is it? 1.50. He has two options. One, sell off the existing portfolio and acquire RF. That is option number 1. So let us do option number 1. Working note number 2, introduction of RF. Okay, so here what will happen is beta overall is nothing but beta of portfolio into weight of portfolio plus beta of RF into what? Into weight of RF. Everybody clear with this part? Fine. So now beta overall will be nothing but 1.50. So I think we got the overall beta that they're desiring is how much? 1.25. Am I right? So this into some weight plus what is beta of RF? 0. 0 into 1 minus weight. So in other words, 1.25 is equal to 1.5 W. Therefore, W will be equal to 1.25 divided by 1.5. Do you get the answer as 0.8333 as a weight? So the logic of this 0.8333 weight is that, friends, out of 100%, I should retain 83.33% in the portfolio. Balance 16.67%, what am I supposed to do? I am supposed to invest in RF, or in other words, total amount of investment is 10,000 lakhs. Out of that, 8,333.33 lakhs should remain in the portfolio. 1,667 lakhs is what I'm supposed to invest in the RF. Now for this 8,333 lakhs that is coming over here, we have 3 stocks. What are the 3 stocks that we have over here? ABC, A, B and C. What was the weights that we had? 40, 30, 30. So out of this, 40% should come over here. That is 3,333.33. 30%, that is 2,500 should go to B and remaining 2,500 should go to C. That is how the answer should come. Is everybody clear with this part now, friends? Alright, now that is the first part. The next thing that they want is they want to take appropriate action in Nifty future. So I'll write down now, next working note heading, analysis of Nifty futures. Everybody clear? So now for Nifty futures, let me just write down over here. Point number A, current traded value. Current traded value. How much is the current traded value? Is it turning out to be 5,000? And it is dealing in multiple of how much? 500. From this, can I find out the contract size? That will be 5,000 into 500. Do you get the answer as 25 lakhs? Am I right? Okay. Once you get the answer as 25 lakhs over here, I will go to the next part. Okay. Next part, I will find out, okay, they want to reduce the beta using Nifty future, correct? So, action in Nifty futures. So, the action to be taken would be point number A, current beta. Everyone tell me what is the current beta? Is it 1.50? Point number B is what we call it as desired beta. What is the desired beta? 1.25. Therefore, what will be your reduction in beta that you are looking at? Do you get the number as 0.25 friends? Okay, next one. Once you get this reduction in beta, point number D will be S0. How much is the S0? Is it 10,000 lakhs? Therefore, value to sell will be 10,000 into 0.25, that is 2,500 lakhs is the value. Okay, we know the contract size also. What is the contract size? Is it turning out to be 25 lakhs? Therefore, can you tell me what will be the number of contracts? Do I get the answer as 100 contracts over here, friends? Fantastic. Are you all clear with this part now? Okay. Once you get that, let's read. Find out the portfolio beta. Have you already got the portfolio beta? How much is our portfolio beta? 1.5. Okay, we got the answer. Value of RF to be acquired. Did we get the answer for that also? How much was the value of RF to be acquired, friends? We got the answer as 1667. Am I right? Next one. What else did they ask for? Number of shares to be disposed of. Oh, that's a very good question. So we need to find out the number of shares to be disposed of based on this, correct? So I'll write down the next working note heading. Number of shares to be disposed of. So when you do this, I'll just come down and write down particulars A, B, C. A, B, C. So what is the current value of portfolio? I think it's 4,000, 3,000, 3,000. What is the revised value that you're getting over here? 33332525, correct? 3,333.33, 2,500, 2,500. Okay. Value that's to be disposed of will be 666.66, 500 and 500. What is the market price per share? 400, 500, 600. From this, can I find out the number of shares that we are trying to dispose? 1,66,666. 1,83,333. This much shares I should sell, and with this sale I must sell this and invest in RF. Are you all clear with this concept now, my dear friends? Perfect. So that also we have found out. Okay. Now, number of Nifty contracts to buy and sell also we have found out. Let's just cross check the answer with your suggested answer. Okay. Beta 1.5. Value of RF to be acquired. They got 2,500. Hold on. We got 1,667. Is there some correction there? Let me just cross check again. It is 0.833. We have done it correctly. There is no mistake here. 0.833. Okay. How much did they get? They got the value as 2,500. Friends, this is not correct. I'll tell you why. They have very clearly told dispose of a part of his existing portfolio to acquire RF is what they have told over here. What they have done in your suggested is that they have assumed that we'll keep the portfolio as such and we will introduce RF. But that is wrong because your question is very clearly put up like this. This confusion comes in CA exams also. Ignore the suggested. It is by it's not an IC CMA approved suggested answer. Ignore this. It's just one of the sources that I have collected. You follow what I have done. It is correct. 0.8333 is what you will get. Okay. 1,667 and we got the number of contracts as 100 also. Now, value of portfolio beta for a 4% rise in Nifty. Next working note, revised portfolio beta. Friends, we know the formula for beta is nothing but change in portfolio divided by change in the market. Am I right? So here they are asking value of portfolio beta for 4% rise in the Nifty is what they are asking over here. So if there is a 4% rise in the Nifty, one moment, let me see how your book has planned that up. They got the answer as 1.125. Hold on. 4% rise in the Nifty. This whole question was not considering Nifty. Just one moment. RF is clear. Portfolio beta is clear. Number of shares. Number of Nifty to buy and sell we have got. Value of portfolio beta for a 4% rise in the Nifty. So what will happen in that case is, one moment, I will explain to you. So what we have done over here is, okay, we have already decided that we are going to sell 100 contracts. Am I right? So once you sell 100 contracts, now we are having two markets. I'll take the two markets. One, we have the spot market. Two, we are having the futures market. Everybody clear with this part? Okay. Now, in the spot market, in this Nifty futures, we were actually going long for a value of 10,000 lakhs. Yes or no? And in the Nifty future, we are going short for a value of how much? For a value of 2,500 lakhs if I am not wrong. Correct? Yes. 2,500 lakh I am going short over there. In the spot market I am going long for a value of 10,000 lakhs. So I'll just put the numbers very clearly. You have A, you have B and you have C. Correct? So A, B and C, you had a market value of how much coming in over here? Initial market value. Was it turning out to be 4,000, 3,000, 3,000? And here we have gone short for a value of how much? 2,500 lakhs. Why did we go short for 2,500 lakhs, friends? Current beta was 1.5. We wanted to reduce it to 1.25. So how do we reduce it? By doing a reduction in beta of 0.25. So the value to sell turned out to be how much? 2,500 beta. Now what has happened? Nifty has gone up by how much? 5%. So if you have sold it for 2,500 lakh, now indirectly what has happened? This 2,500 lakh has gone up by 5%. Are you getting my point? So the Nifty value that I am short will be now 2625. So I'll just put this same table format. Current beta 1.5. Desired beta, I'll keep it blank. Reduction in beta also I'll keep it blank. Value in the spot market is 10,000. So this S0 into beta is what should be the Nifty value. That's how we got the answer as 2,500 earlier. Now it has gone up to 2625. Are you getting my point? So something into 10,000 should give you 2625. So that is 0.2625 if I do a reverse working. Are you getting my point? So 1.5 minus 0.2625 when I do, I get the beta over here as 1.2375. This will be the revised beta of the portfolio. Are you all now clear with this part, friends? This is how you find out the portfolio beta for a 4% rise happening in the Nifty. So we are done with this particular question also. Can I go to the next question, friends? Next question is a very, very good question. Friends, we have already done this question in my YouTube channel. I am sending you the link right away now so that we don't need to replicate what is already done. Am I right? Just a moment. This was done a little while earlier. It was one of the very important questions and I had done it. Options hedging. So you just have to go to my YouTube channel. Take Tarun Jagdish. Here, I'll just exactly share with you the link. There's a lot of AFM and CMA SFM data here, friends. Just follow my channel, all right? Yes, it's somewhere over here. Important question, clean price, dirty price, stock lending. Yes, this is part 2. There is a part 1 to this. Option. I believe this is part 1. This is part 2. Option hedging. Yes, this is the question, friends. All right. So, what I'll do is I'm sending you this video link. Please take this link and just save it. This is exactly the same question that has come in your exam. So, I don't want to simply do the same question and waste your time now, friends. Will that be okay with all of you? Yes, I'm putting it here. Just check if yes, the link has come over there. Okay, so that is this question, friends. Exactly the same thing is already done, so I'm not wasting my time doing it again. All right, can we go to the next question now? Question number 7a. 7a is also a question from the CAAFM. Same thing is done in my mastery book, but we will do it live now. Shall we do it? Question number 7a, June 2023 CMA SFM examination. Working note number 1, basic data. Working note number 1, basic data. Norton has imported goods to the extent of 1 crore. So, point number A, import value is equal to 1 crore. The payment terms are 60 days interest free credit. 60 days interest free credit. For additional 30 days, interest at the rate of 7.75%. Additional 7.75% per annum. The banker of Norton has offered a 30-day loan at the rate of 9.5. So bank interest rate is 9.5%. This is supplier interest rate. Are you understanding the difference, friends? Supplier is going to give you interest on dollars. Bank will give you the interest on rupee. They have given you the rate, so they have given you the spot rate. What is the spot rate? 75.5. Point number B, 60-day forward is 76.15. 76.15. 90-day forward is 76.45. Are you clear with this part? Now, from this, they are asking advice. Which one of the following options would be better for Norton Limited is what they are asking. So, either I should go with the supplier or whether I should go with the bank is what they are asking. So, let's do one thing. I'll write down over here option number 1, supplier option. So, point number A, dollar payable. So everyone tell me how much is a dollar payable over here? Is it turning out to be 1 crore or 100 lakh dollar? 100 lakh dollar. Interest for 2 months will be the, what will be the interest for 2 months? It will be 0. So what will be the closing balance at the end of 2 months? Everyone tell me. Will you get the answer as 100 lakh dollars only? Everybody clear? After that, they are charging interest at 7.75% per annum. So 30 divided by 365. I think it is a 1 year is 365 days, correct? No, consider 360 days is what they are telling. Okay. 30 divided by 360. So I'll get the answer as 0.6458 lakh dollar. Therefore, what will be the closing balance at the end of 3 months, friends? 100.6458 lakh dollar. Everyone clear? Fine. Once you get this closing balance at the end of 3 months, I'll go to the next part. I'll take the exchange rate at the end of 3 months. That is 90-day forward rate is 76.45. Do you get the answer as 7,694.37 rupees is payable? Under which option? Under the supplier option. Okay. Now I will go to option number 2. What is option number 2? Bank option. So when you take a bank option, what will happen is you will initially have a dollar payable. How much is that? 100 lakh dollar. For the first 2 months, no interest. So your closing balance will become how much, friends? Will it become the same 100 lakh dollar? Yes or no? On this, you're going to have an interest at the rate of, no, now you are converting it. In the Indian option, you have to convert into rupee. We have to make payment to him. 76.15, 60 days, 76.15. So, rupee payable will be 7,615 lakh rupees. Everybody clear with this part? Now, once you get this rupee payable, on this you will have an interest at the rate of how much percentage? 9.5% for 1 month. That is 60.28 lakh. So your closing balance over here will be 7675.28. So under the supplier option, you end up paying 7,694 lakhs. Here you pay 7,675 lakhs. So which is better, friends? The supplier option is better. Are you all clear with this question now, friends? So we are done with this particular question also. Fantastic. Next question, Canadian dollar 10 lakh 10,000 is exactly the same question from CA final AFM. And friends, that question also is already there. So what I'm thinking is I'll just show you that question also. Okay, and I'll send the link to you right away now. Whatever is already done, let's not do it again and waste our time, friends. All right. I think that question, what is the question? Canadian dollar 10 lakh 10,000, right? It was done as expected questions recently. That was also there for AFM. Forex in 60 minutes, AFM expected questions. Case scenario. Okay, I think searching here will be difficult. Let us do one thing. We will do it together now. All right. We'll do the question now. Shall we do it together, friends? Okay. What is the question number? 7B. Question number 7B, which is a question from Forex. Exactly same question is there in my mastery book also, and I think it is there in my ODB book also, friends. Friends, mastery book covers all the questions, 400 to 500 questions. ODB book covers 150 questions, limited, which covers maximum. Okay, so both books are very, very useful from the examination point of view. On the day of the exam, use ODB, otherwise you use mastery. Now, what I'll do is, here you are having two options. I will do the first one. Second option is exactly the same as the first one, that you can do it as homework. Alright. So, I'll write down working note number 1, basic data. Working note number 1, basic data. So, there is a payable of Canadian dollar 10 lakh 10,000. CAD payable. I am only talking about 10 lakh 10,000 CAD. Same way you can do the other one also. Alright. On 31st July. Due on July 31st. Everybody clear? Now, the company's risk covers and its policy is to hedge the risk involved in all the financial transaction, blah, blah, blah. The financial manager of the company is thinking of hedging the risk using two methods, forward and options. So, option 1, forward contract. Option 2 is what, friends? Option 2 is to go with options contract. Okay. Is everybody clear with this part? Can I go to the next one now? Options contract. Now, down they have told following quotations regarding the rate of exchange USD, US dollar per CAD is given. So, they have given dollar bar CAD. So, friends, now what is today's date? Today is June 30th. So, friends, June 31st will be how many months forward? This will be 1 month forward. Am I right? Correct. So, now what I'll do is I'll go to the next working note. Working note number 2, amount payable under what market? Amount payable under forward contract or in the forward market. Point number A, CAD payable. So everyone tell me how much is the CAD payable? 10 lakh 10,000 CAD. Down we need to take the 1 month forward rate. Same way when you're doing 7 lakh $5,000, what are you supposed to take, friends? You're supposed to take the 3 months forward rate. Okay. So here, what is the 1 month forward rate? 0.9301. Dollar bar CAD. Everybody clear? From this, can I go and find out how much is the dollar payable? Is it turning out to be 9,39,401 dollar is payable? So that is the amount payable under what market? Under the forward market. Okay. Now write down the next working note heading: analysis of options market. Analysis of options market. Down they have given you some data for the same thing. Price for Canadian dollar bar US dollar option on a US stock exchange, that is cents per Canadian dollar, payable on the purchase of the option. Contract size is 50,000. So here they have given you the contract size. Point number A, contract size. So what is the contract size? Everyone tell me. 50,000 CAD. Down they have given you the strike price 0.939495, call option, put option. So I need to decide whether it is going to be a call option or whether it is going to be a put option. To decide that, friends, I have a payable. So what will I do? I will buy CAD. In return, I will sell dollar. What will the bank do? Bank will sell CAD, buy dollar. Here the exchange rate is dollar bar CAD. So what is the commodity that's coming over here, friends? CAD. What is the bank doing? Sell CAD. So what option is applicable? It will be an ask rate. That is question number 1. Second thing, here the commodity is CAD. Correct. I am buying CAD. So I need a right to buy. If I need a right to buy, that is what you call it as buying of what option? Call option. So what is the option applicable to me, friends? Is it a call option or a put option? Call option is applicable to me. Put option is not applicable. Only what is applicable? Call option is applicable. Now call option for July or September. Since my payable is on July, it will be July. Now in July, I have 3 exercise price: 0.93, 0.94, 0.95. Which one I need to check? So they have told 1 month option should be bought at a strike price of 94 cents. So this is the answer. Are you clear with this part? So I'll write down over here. strike price, or that is nothing but the exercise price. So what is the exercise price? $0.94 bar CAD. And they have also given you the premium. So what is the premium that they have given you over here? Is it 1.02 cents, or in dollar if I convert it will be $0.0102 bar CAD. Are you all clear with this part now? Okay. Now, the firm would bear the risk itself, etc., etc. So now with this data, I need to find out what is the amount payable under the options market. All right. So I'll just take the next page and I will write down amount payable under the options market. Everybody clear with this part now? So here what will happen is point number A, total amount that is payable. Everyone tell me what is the total amount payable? Is it 10 lakh 10,000 CAD? What is the contract size that they have told you over here? Is it turning out to be 50,000 CAD? From this, can I find out the number of contracts? So the number of contracts would be 20.20 contracts. Of this 20.20 contracts, 20 contracts, and here I will put 0.20 contracts. So 20 contracts can be entered in the option market, that is 10 lakh CAD. Balance 0.2 we will go under forward market. So that will turn out to be 10,000 CAD. Everybody clear with this part? For this, we have a strike price of $0.94 bar CAD, correct? So what will be the dollar payable for this one now? Will you get the answer as $9,40,000? For this, we need to take the forward rate. What was the forward rate that we had? 0.9301. So that will be $9,301. Everybody clear? Now when you add up these two things together, you get the answer as $9,49,301. This will be your total. Once you get this total, now I need to pay the premium also. So how much premium will I pay over here? Shall I go and check? $0.0102. So on 10 lakh, 0.0102 would be $10,200. How did I get this? 10 lakh into 0.0102. Okay. Now, if I take up this, I will get the total amount that is payable. So what will be the total amount payable? Do I get the answer as $959,501? That's it, friends. So under forward, you end up paying 939,401. Under options, 959,501. So which is cheaper, friends, forward or options? Forward is cheaper in the first case. In the same way, you have to go and find out for the second one, 7,05,000 on your own. Let's just cross check with your solution also, friends. See, we got the same answer, 959,501. Okay. And under the forward cover, they got 939,401. Are you all clear with the logic now, friends? We are done with this question also. Alright, I think now we have one big case study only left to be taken, and we have an NPV question. Friends, this case study is very long and I am not keeping very well. This one question we'll do it later, this last one. But we have an NPV question to solve at the beginning. Can we do that now, friends? And with that, we'll pack up today's session. Okay. So we are done with 2023 June paper today. Tomorrow we will do December 2023. Like that, we'll cover papers. Will that be okay with all of you? Yeah. All right. The final question for today. Are you all ready? Question number 2A, June 2023 CMA SFM examination. Working note number 1. Basic data. Working note number 1, basic data. Srishti, a manufacturing company has a machine Z which is 10 years old. Machine Z is 10 years old and is in badly in need of an overhaul. Overall cost is given below. So let me add up these two. Motor and generator. If you overall 17 lakh 50, 22 lakh 50, total will be 25 lakh. Overhauling cost is equal to 25 lakh. These expenses can be capitalized and depreciated for what purpose? For tax purpose. Okay, over the next 5 years. Okay, so life 5 years, salvage value 0. Okay, so with this, I think we can also find out the annual depreciation. How much will be the annual depreciation that you will get based on this? Will you get the answer as 5 lakhs over here, friends? Fantastic. These costs increase at 5% with inflation. So what is the inflation rate that you have over here? 5%. Friends, will the inflation affect the depreciation part? The answer is no. Machine Z has 0 book part with the old parts, but can be sold for 2 lakh. Sale value today is equal to 2 lakhs, and the difference will be charged to tax at 25%. So if I sell today, my profit today will turn out to be 2 lakhs. On that, I will be paying a tax at the rate of how much percentage? 25%. So what will be the tax amount that you will get over here? 2040. Will you get the answer as 50,000 rupees as a tax amount? Correct. So after tax income, if I sell the asset today and finish it off, I'll get 1 lakh 50,000. Everybody clear with this part? Okay. Now, installation of a brand new set of pair. Okay, so they have option 2 now. So I will now write down working note number 2, analysis of option 2. Analysis of option 2. Installation of a brand new set of part instead of the overall item would mean a cost of 40 lakh. Cost of new machine. That would turn out to be 40 lakhs. Point number B, with depreciation similar to overhauling. So for this also the life will be how much, friends? 5 years. For this also your salvage value will be 0. Hence for this also your depreciation would turn out to be 40 minus 0 by 5. That will turn out to be how much? 8 lakhs will be your depreciation cost. Everybody clear with this part? Now this replacement will result in the following cost from 1 year with an inflation. The same inflation will apply to them also. Inflation rate will be how much? 5%. Point number F. Now they have fuel, labor, maintenance and others. All together, is it turning out to be 20, 32? 32 and 8 is 40 lakhs. Yearly cost will be 40 lakhs. EFG. Let's continue reading. Overhauling or replacing will be done within a month and will not impact the annual production. There is no scrap value. Cost of capital is 10%. So the discounting factor is turning out to be 10%. Okay. Now based on this, they want you to find out the NPV of overhauling the machine, NPV of replacing the machine, and which one is better. So friends, here you have the following options. Option 1, overhaul. Option 2, replace. Friends, if you are overhauling the machine, you cannot sell the machine. Are you getting my point? Now here what have they told? It has got 0 book value. If I am overhauling the machine means I'm giving servicing and I'm upgrading the machine. All right. So if I overhaul, I cannot sell. But if I don't overhaul and if I'm replacing, I can sell this. So based on this, I need to calculate inside this NPV of overhaul versus NPV of replacement. So now I will write down the next working note. Analysis of overall option. In that I'll put step number 1, initial cash flow. So when I overall, first thing is I'll have to pay 25 lakh today, correct? Sale value today 2 lakh, that will not come. Tax, that will advantage I will not get over there, but I will be investing 25 lakh today, correct? Okay, that is the initial cash flow. Let me just go and check. Post overall operating expenses would be as follows. Oh, this I forgot to write. 17 lakh plus 15 lakh plus 7.5 plus 5. Hold on. 45 lakh is the in between expense. Okay. Now I'll write down Roman number 2, in between expense. So here what will happen is I'll put a table like this. Here 1, 2, 3, 4, 5. First one will be running expense. So there you have petrol, you have labor, all this will increase at 5%. So I'll write 45 lakh, 47.25, 49.612, 52.09, 54.69. Apart from this, what will also come for you, friends? You'll have depreciation. What will be the depreciation cost now? 8 lakhs. Am I right? No, no, no. It's 5 lakhs. Sorry, friends. It's going to be 5 lakhs. 5 lakh. Now, when I put it this way, I will get my total expense. 50, 52.25, 54.612, 57.09, 59.69. On this, I will be getting a tax advantage, correct? What is the tax advantage told over here? 25% is the tax rate, right? 12.5, 13.06, 13.653, 14.27, 14.92. So from this I can find out my after tax cash flow. That will be 37.50. No, I'll just be getting tax effect. Wait, and once I get the tax effect of, on these two things, I'll get tax advantage. But my cash flow is only running expense. I don't, depreciation is not my cash expense. So my cash flow will be from my running expense of A, I will have a tax advantage. That is the picture. So 45 minus 12.5 will be 32.5. 47.25 minus 13.06 will be 34.19. 35.959. 37.82. 39.77. Are you all clear with this part now? All right. So this is how you get the cash flow for the overhauling. So then I'll write down over here Roman number 3, present value cash flow of overhauling. Here cash flow discount factor, discounted cash flow. Year 0, how much are you putting in? 25 lakhs. Year 1, you get 32.5. Year 2, 34.19. Year 3, 35.959, 37.82. And year 5, it is 39.77. Discounting rate is how much percentage? 10%. 1.909, 0.826, 0.751, 0.683, 0.620. So here you will get 25, 29.54, 28.24, 27, 25.83, 24.65. I'll get the answer as 160.26 will be my NPV. Sorry, the present value of overhauling cost. Everybody clear with this part? Option 2 is what I need to work out now next. They haven't told anything about income over here, right? Just confirm that part also. So we can only find out the present value of outflow in that case. Everybody clear? Alright. I'll now go to the next one. I'll write down the next working note heading. Present value of new machine. Roman number 1 will be what, friends? Initial cash flow. So what is the initial cash flow? Everyone tell me, is it turning out to be 40 lakhs? Roman number 2 is going to be what? In between cash flow. Again, I'll have the same thing. I'll have running cost and I will have depreciation. So now my running cost is going to be how much? 40 lakh, depreciation is 8 lakhs. 42, 44.1, 48.62. And my depreciation is going to be 8. So from this I'll get my total expense, that is 48, 50, 52.1, 54.3, 56.62. On this your tax will be 14.4, 15, 15.63, 16.29, 16.98. So my cash flow will now be 40 minus the tax. 40 is going from my hand. Tax is my advantage. 25.6, 27, 28.47, 30.01, 31.64. Everybody clear? Once you are done with this, I can now find out the present value. So I can put the PV factor here itself. 0.909, 0.826, 0.751, 0.683, 0.620, 23.27, 22.30, 21.38, 20.49, 19.61. So when I add up all these things together, 107.05 plus the initial investment. What was that? 40. 147.05. So here you get 147. Here you are getting 160 for overhauling. So which is better, friends? Buying a new machinery is actually better. Are you all clear with this part now, friends? Let's just check with your suggested answer. Let's not, the numbers might be different. The decision is what is more important here, because the way you do it will always differ sometimes. Still, we'll just check and see. Okay. They got 16 lakh, 160 lakh, 147, 160. They also got the same number. 155 they got, we got 147 NPV because this is better. So friends, our answer is correct. We should go by purchasing the new machine. With this, we are done with this question also. And friends, with that, we are done with today's CMA SFM marathon. I hope this class was useful for you. Like this, we'll do tomorrow also, we'll do day after tomorrow also. Alright. I hope this was useful for you, friends. Only one or two requests. First request, like this video and subscribe to this channel. Request number two, if you found it useful, even your friends will find it useful, please share it with two of your friends so that maximum people can benefit from this video. I'll see you tomorrow with the next question paper. The next one is 1 minute. It should be December 23. Yeah, this is the next one that we are going to do. We are going to do December 23, friends, tomorrow. Alright. So I'll see you tomorrow. Have a nice time ahead. Take care. Thank you for your patient listening. Thanks a lot.